Hi, welcome back to the channel. Now, in this month's analysis, I'm going to walk through a really high level broader market overview. I will cover all of the major indexes and asset classes. I'll cover mega cap tech, and I also have around 20 individual stock ideas for your watch lists going into March. I've also taken the time to prepare the key charts that will also help you to get defensive ahead of any potential correction when and if it does arrive. Now, it has taken around 20 hours to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work this month. Now, for those of you that are maybe new and just stumbled onto my work, hopefully the Scottish accent isn't too difficult to understand. But before I get into the charts, the market over the last few months has been utterly incredible. If you've been working with my charts over these last few months, whether it's on YouTube or Twitter, hopefully the ideas have helped you in some way. We've had an environment that's been led by all of the big mega cap tech hitters such as Nvidia, Meta, Microsoft and the likes. And everybody's falsely told us that only 7 stocks were going up. Regardless, the way that I learned it is the best players really should be scoring the most points. That's how cap weighted indexes work. And now that the mega cap tech game is potentially starting to end, we are now starting to see some rotations and a little bit of a regime change. A lot of the smaller beaten up areas are now starting to catch a bid, so I'll be walking through that for you this month as well. Now, for disclosure, myself or my clients may already hold positions in some of the names mentioned. I have highlighted those disclosures on the charts as well as some timestamps. If you're new to the channel, I like to use a combination of technicals and fundamentals. I'm a huge advocate of systematic process. I think most of you know by now I don't use any magical hindsight indicators. I timestamp absolutely everything, which is massively important in my field. I'm one of the very few who go on the record with the work, but my work is for most folks. I think if you are an everyday investor, trader, options trader, financial advisor, money manager, it's really for everyone, but it's not for buy and hold forever, unfortunately. I'm looking for structural trends in the market that will last weeks to months. I like to use logical targets. If we sat and had a beer, I'd tell you that I'm personally more of a technical investor, but my work does apply to pretty much all styles, and I'm told that my work's of the absolute highest quality and I can put it up against anyone. So I hope you find a lot of value. I do have a lot of clients now at most of the major investment banks, but please do pause the video. Very important disclaimer before we kick things off, and please do smash the like button. It all helps with the YouTube algorithm and does help to get my work a little bit more noticed. So with all that said, I think the best thing to do is really just kick on with these charts. Now, one of the big things that I'm dealing with at the moment, especially from my client base, is everybody's a little bit apprehensive because of the run that we've had in the market. I think we just need to have a look at a lot of the lofty valuations, the momentum moves in the AI stocks, for example. So listen, I get it. If you're in the camp that things are about to fall off a cliff, I get it. But what I would just like to do this month is just walk through a few charts that I think will be better indicators than thoughts and feelings. I think the one that I'm looking at here is the yield curve. If we do start to steepen and come out and we uninvert, I think historically, as the chart shows, this is the S&P 500. Whenever we get that uninversion, we can see that that's typically a signal to perhaps start to look at potential defensive action, etc. Now, as it stands at the moment, the S&P 500 continues to make new highs, so I'm not going to start betting against price at the moment. I am seeing a lot of rotations in the market, and again I will walk through that in just a few moments. But it's very, very difficult to be bearish on the market when we've just got the NYSE composite, for example, now just breaking out to new all-time highs. Now, another one of the defensive charts, and this is something that I've talked with our clients with over the last couple of months, is big problems tend to arise when we start to deal with failed breakouts in the major averages. Now, there are 1,000 examples that I could provide of failed breakouts in major averages causing a lot of carnage. But I think it's very, very clear. I think as long as you prepare for it in advance, I think for me, if the NYSE composite fails here at these levels, that would be a problem. Same message if we're looking for, not just a basket of 500 stocks like the S&P 500. I think if we use indexes like the Russell 3000 and the NYSE composite, I think that gives us a better picture of what's actually going on with the total market. And as we can see, the Russell 3000 at the moment again is going out at new all-time highs, but again the defensive signal would be if this breakout fails in some way. We just need to have a look at some of historical failed breakouts here. This is a longer term S&P 500 chart. We can see that the COVID crash failed breakout, the 2022 crash, if we want to call it that, failed breakout as well. So those are certainly early warning signals that the market will give us. I think that's really just a more logical way of dealing with it, rather than just prematurely exiting positions and not paying attention to, like I said before, a lot of the rotations that we're currently seeing in the market. With the S&P 500 going out at new all-time highs, I just want to highlight as well that if we use RSI here as a really basic metric of whether or not the market is overbought at the moment, the market is not currently even in an overbought condition, despite what some of the individual stocks are currently doing, which are of course massively overbought. But if we look at the S&P 500, I don't think there's a big problem with what we're seeing at the moment. We've got the Dow Jones Industrial Average again going out at new all-time highs. Again, this is just breaking out of a major multi-year base. The same message with the triple Qs. Again, if we go back to the two charts that I presented at the start about the failed breakout, as it stands at the moment, again, it's just easier to be looking for stocks to buy at the moment. And that doesn't mean that you have to, jump in at elevated levels on the AI stocks and Nvidia and Meta, etc. But there is opportunity with a lot of the names that are perhaps only now just starting to catch a bid. But these are the two charts, or the four charts that I think make a lot of sense to me in the current environment. And I think if these charts do play out, I think what you'll find is a lot of the perma bears are going to start to lose their minds. But this is something that I've been preparing our clients and members for the last few weeks, for the possibility of the worst stocks in the US markets just catching a bid on nothing more than fumes. I think there are obviously great companies in the Russell 2000, but there's also a lot of junk. I think if the Russell 2000 here breaks out above that 205 pivot level, I think we'll probably start to see some kind of rotation into the riskiest areas of the market. We are starting to see some of the mega cap tech names take a little bit of a back seat over the last few weeks. And I think what's happening is that there is now starting to be some kind of rotation into these beaten up names. Now, this is where a lot of the alpha will be found, especially for those of you that are doing this professionally, money managers, etc. I think in the small cap names, I think the micro cap names as well. I've already started to put a few micro cap names to our clients over the last week. Again, I think if the micro caps can take out the AV/WAP levels here, again, I think it's potentially a risk-on environment, despite a lot of the the recession doom mongers, the perma bears. Listen, I get it, but at the moment the charts are currently signaling that we are on the cusp of a little bit of a rotation. We've already got the S&P 500 high beta ETF breaking out. We can compare that high beta to low volatility stocks, and again, this is just another chart that's just signaling that we're potentially moving into an even more risk-on environment. So I'm very, very aware of what the charts are signaling at the moment. Like I said, just to reiterate, I am currently bullish on the market. I think it's very difficult not to be, but it also, you have to be aware of where that bullish thesis is invalidated. And for me, the charts that would signal that are the failed breakouts in the major averages that I talked about previously. Now, I do have just a few more charts to get into before I get into the individual stocks, but I do like to talk about the US dollar index and how the dollar impacts on the S&P 500. I think it's the most important chart in finance. For those of you that follow me closely, you'll know I've been banging the drum on this for a number of years, just about the inverse correlation and how a weaker dollar is good for stocks, and obviously a rising dollar is obviously bad for stocks. So I'm watching with a lot of interest what the US dollar index decides to do at these levels. But it's very, very clear. The VIX, whilst we have had to deal with a spike or two recently, again, we're in the green zone for me. This is just another chart that just supports looking for stocks to buy. We're printing a 13 on the VIX. I think when we start to get, VIX 20, 25, then that's of course a problem. There's a lot of chop when we get to these levels, but as it stands at the moment, it's a very clean, healthy trend. I'm also looking at the 10-year Treasury note yield. Obviously, the bond market is massive. I made a top in rates call a few months ago. That's continuing to play out, and I am expecting rates to fall away at these levels over the coming weeks. What does that mean for, obviously, charts like TLT? Well, given the inverse correlation, I'm in the camp that TLT bottomed a few months ago. This is a massive call that I made at the time. It's a big support level dating back to the year 2000. We got a rebound. Textbook ripped 20%. We've had a little bit of a retracement, but again, I'm expecting there to be some kind of rebound. Now, again, very, very clear with the whole risk management game. Very, very clear where that thesis is invalidated. If we start to break below, those 90, 150 levels, then potentially the thesis is wrong. But as it stands at the moment, I'm quite comfortable with the thesis that I'm presenting. And obviously gold gets a lot of attention, especially with the doom mongers. There's still nothing going on in gold for me at the moment. The chart has not changed for a number of months, and still waiting for that breakout to materialize over that 2100 level. Now, I am about to get into around 20 individual stocks. Now, please understand that I am recording this analysis halfway through Friday's session on March the 1st. So some of these charts are, of course, subject to change in the next few hours. I don't know what the market will look like going into the close, but I'm hoping that the charts won't change meaningfully. Now, like I said, I have highlighted disclosures on the charts. This just shows that these are charts that I have already recommended to our clients at various price levels. I have done my best to just highlight where they've been recommended just for disclosure. But with Netflix, I think Netflix, there's every chance is potentially breaking out again. The upside targets that we are working with here are up around $700. We've also got Meta, which again is breaking out. I think it's on its final run here, and I think the level that we've got that we're working with is around 565. I think if we get to around 565, I will revisit the upside targets. But this is a stock, just to be clear, that we've been bullish on for the last 15 months. Continues to work and advance higher. Coinbase, obviously with the whole Bitcoin momentum that we're currently seeing at the moment, there's a lot of folks that are obviously looking at Coinbase. Again, I think the level for me here looks to be above 210. I think if we can take out that 210 level, I think we're probably in an environment where Bitcoin is continuing to rip higher. And I think when we get these breakouts in the likes of Coinbase, you're obviously dealing with quite lofty upside targets if the breakouts stick the landing. So above 210 would be the level for me there on Coinbase. Big breakout of a 3-month base here for CPRT. Again, this is a $51 billion market cap, and interesting 12 months earnings growth as well. So there's a lot of fundamental catalysts to support it. I'm working with an upside target there around 66. Now, Apple is interesting to me at the moment. I think there's a lot of doom mongering around it. I think they obviously news this week about the car being abandoned, etc. I get it, but listen, folks, if you're out there and you're looking at shorting stocks like Apple, I would suggest it's a hard life ahead. I think it's a lot easier to just look at Apple as a buying opportunity. And for me, I'm looking at the chart now as being range bound. So what I am starting to do is start to build in potential support levels for the stock. Obviously, I've got a lot of clients that are interested in buying the dip in stocks like Apple. So this is one of the charts that I'll be updating for them this weekend. And I think 165 might be a potential support level there. We've also got Tesla. Now, I'm bringing Tesla back onto the radar just simply for one reason. If you picked up last month's analysis, what I did was I walked through what capitulation looks like in a stock, and ultimately how Tesla is one of those stocks that I think recent history shows us that it's one of those stocks that you can buy it when it's deeply oversold. Now again, the thesis that I've had here has continued to play out. I think we're around 15% off its recent lows. So the hope is here that Tesla can catch a little bit of a bid and continue to move higher. But like I said right at the very start, I do work with very systematic process just in case the thesis is wrong. So I do like to work with things like trailing stop losses with very, very specific parameters. So again, I'm still bullish on Tesla for those of you that are asking. And again, it is consolidating over the last couple of weeks. It's done a whole lot of nothing for 2 weeks, but uptrends take a little bit of time to resolve themselves. And I think for the moment, I am still bullish on Tesla. Spotify. Again, just for disclosure, this is one of our high conviction ideas for our clients. I think Spotify is breaking out again. I was saying to our clients in our midweek report that I do want to see now the $250 level act as a new floor for price. The reason for that is I've got a little bit of a thing with round numbers. If you think about $100, $200, $1,000, what you tend to find with price is these levels act as really big support and resistance levels. I do put $250 in the same category. So for us, whilst the idea is obviously working really well, it makes a lot of sense really just to kind of shift up stop losses. Our systematic process is already up at 242 anyway, so that's okay for most. But we are working here with upside targets around 300, 305. Amazon closing in on upside targets. We're working with $190. Now Nvidia, going back to what I was saying at the start, listen, I get it. Buying into something that's already ripped, 60, 70% this year, I get it. It's not for everyone, but it does look like it is catching that kind of Tesla momentum move that we've seen from a few years ago. And it does certainly look like Nvidia wants to test higher prices. Now, how far can it go? Listen, I've no idea, folks. We could see a correction in Nvidia, in the next week, in the next month, who knows. But what I can say is, if you are looking to manage risk, I think these Fibonacci levels can make a lot of sense. So perhaps if you are wanting to take another bet on the next leg higher, you could keep it simple and just bullish above 785, not so bullish below it. And we've also got ARM, which again has been a massive gainer. I get it, it's not for everyone, but the way that I look at these kind of charts, and for those of you that are maybe learning, if you have a look at maybe what a high and tight flag is, potentially we could be dealing with something here in ARM. The $164 is the all-time high level, so I think there is every chance that this move that we're seeing in the AI space in the semiconductors might not be done quite just yet. But there are obviously some names that have rallied massively off their lows. Again, Disney made a massive bottom call on this last year. It's been working well, and I think there's a potential here that it's basing again. I think above 112 is the next breakout level. Obviously, this is a $200 billion market cap. We've got Uber. Again, we're working with upside targets here around 91, so there is still a little bit of juice, in my opinion, still left in that stock. Caterpillar, again, above 385. Would be 385 would be the target that we've got there. CBOE again is only just broken out. I think with something like CBOE, massive beneficiary of the explosion in the options game. So potentially we're working here hopefully with upside targets. I think going back to what I was saying about the round number concept, this is actually just a perfect example actually of what's going on. I need to update this chart now. It's running to that $200 round number, and it's just fallen away a little bit. But if it can take out 200, then obviously that brings in the next Fibonacci levels as the upside targets. Now, I wanted to cover Shopify because I covered this one last month. Just highlighting that I was looking at upside targets of 112. Now, obviously, with the caveat to upside targets, especially when we're dealing with earnings season, we have to get through earnings season relatively unscathed. Now, for me, the Shopify earnings were a little bit lukewarm. I get it. There's been a little bit of a pullback in price, but ultimately, I think the message for me is bullish above 70, and below 70. The bullish thesis is probably invalidated. I think this is a pullback potential buy the dip opportunity, but please do all your own due diligence. Last few charts, we have NU Holdings, which is breaking out again. Ultimately, this is one of those stocks where, if you do a little bit of research into it, there's a lot of really smart folks that see this 3xing, 4xing from these levels. Now, although it's only an $11 stock, you might notice in the upper right of the corner of the chart, it is also a $52 billion market cap. So this is a massive, massive company already. But we're working with upside targets around 12.25. If it can take out that, then I will be adding more extension levels and obviously trying to figure out upside targets from there. But as it stands at the moment, fully expecting this to go and test previous all-time highs dating back to the IPO. Celsius Holdings, again, for those of you that follow me on Twitter, you'll know that I posted this chart the other day. Massive earnings, blowout earnings, explosive earnings growth. And I think what we're seeing with Celsius is that being reflected in the stock price. It has broken out of a massive 6-month base. I think any weakness in something like Celsius, I think you should probably look at buying it, with the caveat that price on any dip remains above that $70 level. But very, very difficult to be bearish on something like Celsius. If you look at the RSI, I think on the, let me just switch to the daily chart here, you can see that it is massively overbought at the moment. I think RSI yesterday was up at 85. So it is quite reasonable to expect a little bit of consolidation, a little bit of cooling off. But as it stands at the moment, I think it's very, very difficult to be bearish on something like Celsius, especially with the fundamentals that they are now starting to post. JP Morgan, fresh all-time highs, still working with those targets up around 216. Toll Brothers, again, massive recent move in Toll Brothers. Fully expecting this to go and test that 134, 135 level, provided the market obviously holds up. And another name that I'm just going to end up with here now, this has been a massively volatile week for Shift 4 payments. I'm going back and forth on this one, whether or not to maybe just take a starter position. The reason for that, for those of you that pay attention to the markets, is there's a lot of rumours at the moment about Shift 4 payments potentially being the subject of a little bit of a bidding war among a few companies. I've seen numbers banded about valuing the company at anywhere between 130, 140 bucks a share, which is obviously a massive premium on current stock prices. I try not to pay too much attention to rumours because obviously it has to be reflected in price. But I think with something like Shift 4 payments, if you can define the risk, so if there is any kind of shenanigans and a little bit of a pullback, I think, potentially just bullish above 75, and if it falls below 75, perhaps quite an easy out, and maybe the thesis of a bidding war maybe isn't playing out either. So that's actually the way that I'm looking at these charts at the moment. But if you are still here, please do smash the like button. Like I said, it does help with the YouTube algorithm, etc. But if you're new and you are wondering who I am and what I do, feel free to jump on to our website. There is a link in the description for honeystocks.com. Our transparent timestamp work, it's all laid out. But I do only use my own charts and data, but what we do provide for our clients and members is access to all of our premium work, which includes our premium weekend analysis every single weekend with all of our best charts and our weekend hot list. We provide access to all of our high conviction and investment ideas. I'll show you what that looks like in just a second. We also provide access to our midweek halftime analysis. We provide access to a wonderful community of professionals, investors and traders from all across the world. Access to all of our chart books, which cover the most liquid stocks, ETFs and commodities from across the world. And maybe if you are new to something like technical analysis and you want to learn a little bit more, I also provide access to our complete technical analysis program, which I'm told is very, very good. But just to kind of quickly show you what our high conviction ideas look like. If you look at something like Coinbase, which was a recent idea, worked incredibly well. NU Holdings, recent idea. All the instructions are all laid out on all of our charts. Spotify, again, another recent idea that I think I talked about a few minutes ago. Tesla, very different kind of skill set. This is more of a capitulation idea from last year. I think Tesla from this idea went 80-90%. Meta, again, talked about that just a few moments ago. It's been a high conviction idea from 125 bucks. But I am very, very unique in what I do. I log Every single high conviction idea that's ever been sent to our clients, I timestamp absolutely everything, which I can't emphasize enough is incredibly important for my field. But I have done this for the last 6 years. So please do go and check the types of stocks that I like to recommend are the types of stocks that you like to buy. I'm not recommending any pump and dumps or low quality stocks. All good quality, high quality stocks. And like I said, I've done this for the last 6 years. So please do go and check that out. But I think generally speaking, I think if you have a mid-term approach and you're looking weeks to months out, I think my work is generally a good fit. I think if you are someone who continues to just lose at day trading and really impulsive, can't make it work, maybe you're looking to learn a bit more about technical analysis and systematic process. Perhaps you're too busy with work, life, family, business to hunt around social media. Finding the best stocks is really difficult. Again, my work might be a good fit. Maybe you just want to be part of a community and have access to a professional analyst every day. Again, my work might be a good fit. But that's really the analysis, and I hope you do find a lot of value. Please do like, share and subscribe with all your friends. And if you have stuck here to the bitter end, thank you very much for watching, and I hope to welcome you to my world soon. Thanks very much.